Okay, so welcome everybody. I keep pressing that button, my apologies. Welcome everybody to this presentation on DAC7. What is DAC7? Extending reporting beyond banks and beyond the boundaries of Europe. My name is Graham Jackson. I am the tax partner at Hassan's International Law Firm in Gibraltar. And with me today is Harriet Brown, who is a barrister with Old Square Tax Chambers. We both specialise in international tax and reporting and are the presenters, co-authors, whatever you would like to call it, of the International Tax Bites podcast, which is available at all good podcasting outlets. So just to make a start, we hope that we aren't going to keep you too long on a Friday afternoon, but we think that this is an important issue to be looked at and considered by digital platform operators around the world. So the aims of this session are to explain the background of the DAC7 reporting regime, explain who is obliged to report, explain on whom they are obliged to report, and to help you prepare for reporting by talking about timetables. The DAC7 reporting regime, in general, is an outgrowth of pre-existing regimes. Everybody on this session will hopefully have heard of CRS and FATCA, and DAC7 is related to, if distinct from, those reports. So what it is a response to the fact that our economy has digitized over the last 20 years, and this has allowed people to be in one jurisdiction earning income in another jurisdiction without through the auspices of the internet and service providers, so that they can have income in a jurisdiction without necessarily having a physical presence there, which would automatically put them within the tax net. So the methods by which this is done, I mean, you can see the list of examples on the slide. The platforms have been established which connect users and sellers, sellers and purchasers, or providers and users, and they collect the consideration for the service or the good which is sold on the platform in the manner that eBay does. You log into eBay, you register with eBay, you put your little adverts up on eBay, and then other users can buy those products. eBay facilitates it, collects the money, and passes it to you. So the platforms receive income on behalf of the seller, and the seller or service provider is not employed, though obviously there's been case law around the situation of Uber with workers' status for the purposes of employment law, but they're not subject to PAYE in the usual way or equivalent taxes. And that is a gap in the tax gathering ability of the relevant states. Now, it's clear that this income should be taxed. If this is trade income, it should be taxed. And the way in which people sell on platforms like eBay and Etsy and Airbnb does seem to point towards trade-like behavior. So the EU, and Harriet will go on to explain how the OECD is looking to extend these kinds of reporting obligations in a wider way. But the EU for now has serious doubts whether the smaller vendors and providers are actually declaring this income. And they see this as a gap in their ability to gather information. So this is a piece of anti-avoidance law which is not aimed at the huge multinational corporation. This is aimed at the smaller person utilizing digital ways to trade across boundaries. So the first, Harriet, this is you. Sorry.
Yes, this is me, Graham, trying to steal my content there again. Good afternoon, everyone. Now, what I want to say before I talk about whether you're or not you're in scope of DAC7 is what DAC7 actually is and what it represents. And it is, in fact, based on model rules published by the OECD. These are the model rules for reporting by platform operators with respect to sellers in the sharing and gig economy. DAC7 is very closely related to this, and anyone with any familiarity around DAC6 will know that DAC6 incorporates something very similar to the mandatory disclosure rules. And so this is the EU's version, effectively, or implementation of these model rules published by the OECD. So the first point that I would make there is that we are likely to see similar rules coming in non-EU jurisdictions. So that is the first way in which we anticipate seeing this extending beyond the EU. And we're going to come on in a minute to the fact that actually DAC7 has a scope beyond the EU as well. But before I do that, I do think it's useful to look at the model rules from the OECD, and particularly the foreword, because they explain quite why the scope of this is what it is. So the rules can be found on the OECD website. There are actually two sets of rules from July of 2020, the model rules for reporting by platform operators with respect to sellers in the sharing and gig economy. And then the OECD has actually, in June of this year, produced an extra, what they call module, which allows interested jurisdictions to extend the scope of the model rules to the sale of goods and the rental of means of transportation, which are two things which are covered by DAC7. So those are sort of the allied rules for the OECD. Now, what the forewords to the 2020 model says is this: the market of online platforms facilitating a variety of transactions between users in the sharing and gig economies is growing rapidly. The emergence of these platforms is changing many business sectors in which platforms are active. As part of that change, tax administrations may wish to consider adapting their compliance strategies to reflect that an increasing number of taxpayers are earning taxable income through such platforms. To pause there for a moment, it's interesting that the OECD's used the words may wish. They're not pushing this particularly hard at the moment in the way that, say, things like CRS were pushed politically. They go on to point out that the growth of the sharing and gig economy prevents significant opportunities for tax administrations, as it brings activities previously carried out in the informal cash economy onto digital platforms. So essentially what they're saying there is stuff that was cash in hand that was really difficult to get a grasp on, we can now trace it through these websites. And what they say is this, and this is really the nub of it: certain activities carried out through these platforms may not always be visible to tax administrations or self-reported by taxpayers. This is because the development of the gig economy entails a shift from traditional work relations under employment contracts to the provision of services by individuals on an independent basis, which is not typically subject to third-party reporting. These developments present risks of distorting competition with traditional businesses and reducing declared taxable income. Against that background, a number of jurisdictions have already introduced reporting measures requiring platform operators to communicate to the tax authorities revenues received by platform sellers, while others are planning to introduce similar measures in the near future. So that, in a nutshell, is what both the OECD and DAC7, to come back to what we're actually talking about today, are both aimed at. So start with the scope, which is obviously essential. This is, again, as with most reporting regimes, this is a game of chase the definition. It's not too bad a game of chase the definition, though, it has to be said. And we start from the key reporting entity, which is a reporting platform operator. A platform there on the slide is any software, including a website, or I would have thought primarily a website, or a part thereof, and applications, including mobile applications, accessible by users and allowing sellers to be connected to other users for the purposes of carrying out a relevant activity, which we will come on to, directly or indirectly to such users. It also includes any arrangement for the collection and payment of a consideration in respect of the relevant activity. So as Graham's given some great examples on that first slide, such as eBay and Airbnb, and these are sort of the the really big operators, but there are lots of websites like that that carry out these sorts of transactions and this sort of activity at a much lower level, which are not being caught. And that is, I think, one of the primary areas of concern. So a relevant platform operator is a platform operator who isn't excluded, and I'm going to come on to the definition of that in a moment, which is tax resident in a member state, incorporated in a member state, has its place of management in a member state, has a PE in a member state, or is none of the above, but facilitates the carrying out of a relevant activity by reportable sellers or a relevant activity involving the rental of immovable property in a member state. So to pause there, this really does indicate why DAC7 is something that we in the UK and those in other non-EU countries need to be aware of and need to be concerned about, because it's not just EU tax residents, it's not just EU incorporated entities, it's somewhere that has a place of management in a member state. And that's potentially wider than the next one, which is a permanent establishment in the member state. But in particular, it's this 5, i.e. one that isn't any of the previous ones. So it doesn't really have a relevant connection to a member state, but it allows carrying out of a relevant activity by reportable sellers or a relevant activity involving the rental of immovable property in a member state. So you've either got reportable sellers in a member state or relevant activity involving the rental of immovable property in a member state. And those could both easily hit a platform or a relevant platform operator that has no interest or base in the EU, simply because it has relevant activity carried out on it that involves the rental of immovable property in the member state, or it has relevant activity by reportable sellers. So the scope of this is a lot wider than you're just based in the EU.
So that's quite a large change, isn't it, Harriet?
It is, and it's an interesting one as to how this is going to be enforced, because of course once you get into extraterritorial provisions, enforcement is always a difficulty. And I think that the EU is probably betting on DAC7 being followed by a lot of jurisdictions bringing in these OECD model rules. So there's sort of a degree of mutuality. We're going to want EU member states to enforce for us, so we're going to effectively enforce for them type of thing. But we need to see how that develops. And
of course, a large number of the bigger platforms will have places of management or PEs. And Mrs. Smith, who sells knitted booties or whatever, she's not tax planning on this, is she? She's likely to be an amateur.
Well, quite, and I think really this is what DAC7 is aimed at. And I think if you assume that DAC7 is aimed at the same things that are discussed in that foreword to the OECD model rules, it is those people, it is Mrs. Smith sitting knitting these booties as she's watching Countdown and selling them on Etsy, or Etsy Lite for seniors who like Countdown or whatever it is, that this is aimed at. It's those people who don't really see their businesses as being taxable. And of course, when that has been a cash in hand type business, that has been very, very difficult to identify. And the fact that those businesses are now coming onto the internet, I think, does mean that there is a huge opportunity here. But yeah, those things are potentially caught and reportable.
So there's going to be some very surprised part-time knitters and people that make other crafty goods that are...
no exemption for crochet at the moment. But
there is a de minimis rule, though. There is a de minimis rule, so that's okay. Right, are we ready for the next slide?
We are, thank you. So obviously, this the scope is dependent on two things. You've got your EU nexus, and that is a much broader nexus than you might have thought. So it does, in fact, encompass a number of, or it will encompass a number of non-EU operators. The other sort of determinant of scope is this definition of relevant activity. And it's an activity carried out for consideration. So if Mrs. Smith is giving her booties away, she's fine. And also any of the following. Rental of immovable property, a personal service, which is any time-based or task-based work performed by one or more individual for an entity or otherwise, whether online or not, after being facilitated by a platform. Now that's a mouthful. Graham, any views on that definition?
I think it's very wide. It's designed to catch everything, isn't it? It's designed to I mean, if you look at the four definitions, not just personal service, but the four definitions, it's if you're selling anything, if you're doing anything that requires time, if you're renting out a property, or I'm not sure what else there could be. I would just assume that all activity is caught.
I think that's a good basic position to start from. I do think that's a good basic position to start from. What I would say about this is obviously the rental of immovable property one is going to cause quite a lot of difficulty. And I think that is a difficult one in any event. But yes, if you assume that you are caught and then try and work out if there's a way out, that's probably the better way around it. Personal service is an interesting one. I'm not sure what they would have lost by leaving it undefined so that it merely had its natural meaning. But presumably that will catch these sort of websites or apps where you can sort of go online and say, I'm looking for a plumber in Southend, and sort of advertise a job, and plumbers will come and do the work for you. Possibly it catches those types of websites.
Yeah, I think that's what my feeling is. It's aimed at that service type: plumbers, electricians, painters and decorators. There are a lot. There are specific trade websites, aren't there, that put people together.
Yeah, the name of any one of them escapes me at the moment, but
no, I can't remember either. But I know which ones I mean.
Always the way.
Okay, so we've done a flowchart, which will hopefully help, because it is essentially just a flowchart, just like DAC6 is. Though this is a lot less complicated than DAC6 for anybody who knows DAC6. I think it's also important to just drive home that nearly every anti-avoidance, a big anti-avoidance piece from the EU that I've ever seen before has been aimed at large corporations. And this is, whilst the obligations sit on large corporations, it's aimed at catching those who are not large corporations. They really are approaching the entire economy rather than just the bit that gets the headlines, because tax campaigners don't tend to talk about small one-man bands. They talk about large multinationals. So it's just a series of questions. Do you operate a software platform which connects sellers and buyers? And the other piece, which is that it must collect consideration. If the answer to that is no, then you are under no obligation. If the answer is yes, then you should ask, are you resident in a member state, tax resident in a member state? If the answer to that is yes, then you have an obligation to report on your sellers that are carrying out relevant activities. If it's no, move on. Do you have a permanent establishment? The answer to that is in a member state, yes, obligation to report. No, if you have a place of management, if the answer to that is yes, then you have an obligation to report. Now, place of management is actually quite an interesting concept. One that Harriet and I have talked endlessly about amongst ourselves, the difference between a place of management and the place where you are centrally managed and controlled. The difference between the place of effective management test and the central management and control test, which those of you who are as fascinated by tax and tax residence questions as we are will notice there's a slight difference there. Place of management tends to be more about the effective day-to-day operation, where a central management control is.
And I think that's borne out by the wording, which is a place of management. So yeah. Generally, you'd expect to only have one place of central management or control. And I think generally you'd expect to only have one place of effective management as well.
I'm thinking that you could possibly do something that avoids having a permanent establishment, but you have a team in, say, I don't know, Germany that looks after German sellers, but they don't qualify as a permanent establishment. I think that would be possibly sufficient to catch you. I think you should assume, if you've got any presence, anybody at all in a jurisdiction, that you are in scope. Again, assume you are, and then think about why you shouldn't be.
I mean, place of management is certainly if you don't have a PE, place of management seems to be something less than a PE. And I agree with you. If you sort of have a team of 5 people doing something, or possibly even if you have somebody managing some servers in Germany, that might give you a place of management. It's broader. I'm not sure it can be stretched beyond the natural meaning of the words, but I agree it is I think it's broader than the other 2 tests we've mentioned about management.
Otherwise, it would just be the same thing, wouldn't it? So anyway, so that's, as you can probably see, then there is a reducing hierarchy. So that if RU residence in the member state is the most connected you can be to a member state, then a permanent establishment is the second, and a place of management is a third. And then they're getting the less connectivity as you move down the questions. And then finally, you arrive at the least connected you can be and still be in scope, which is that, do you have sellers carrying out the relevant activity in the EU at all, or a member state? And if the answer to that is yes, then you have an obligation to report. And if the answer to that is no, you don't have an obligation to report. And obviously, as Harriet explained, we do have the problem of enforceability, but these are generally large multinational corporations that don't want to get dragged through the European courts and issued fines in a spectacular and public way.
It's interesting, isn't it? Because a lot of and it must be in inverted commas, the enforcement of these information regimes is political or even media based, rather than a strict enforcement. Because if you take, for example, CRS, in most jurisdictions, the penalties are fairly nugatory. And they may not deter large organizations, but nobody wants to be the person who looks dodgy.
Exactly. So let's imagine a major international auction site that didn't have any people working for it inside the EU, but suddenly it refuses to cooperate with reporting, and suddenly it's accused of facilitating tax evasion, which, as we all know, the failure to prevent the facilitation of tax evasion in the UK is a crime. Is it not, Harriet?
Well, you're getting a bit far beyond my civil knowledge, but yes, I believe it is, Graham.
It is. I was asked about that today. Okay, so that's the simple flow chart, and then we can just move on to some more detailed examples of.
Just before we do, Graham, could I talk about what an excluded platform operator is?
You can,
because there is an exclusion, and I don't think that's coming up.
We've got excluded sellers. So if you want to talk about excluded platforms.
Yes, there is just one exclusion for platform operators, and that is a platform operator which is demonstrated upfront, and I'm not quite sure how you do that, but upfront and on an annual basis, to the satisfaction of the competent authority of the member state, to which, in accordance with the rules laid down in subparagraphs A1 to A3 of section 3, the platform operator otherwise would have had to report the platform's entire business model is such that it does not have reportable sellers. So what that means is you can be excluded as a platform operator from the reporting obligation where you demonstrate at the start of the year to the satisfaction of the competent authority. Now, one would generally see, I think, wording like, when you reasonably demonstrate to the competent authority, but that's to the satisfaction of the competent authority, which I think is supposed to be broader, that effectively you don't have any reportable sellers. So that's the test. I think it's probably going to be in certain circumstances, it's going to be quite difficult to show that you don't have reportable sellers at the start of the year, i.e. up front. So that's one point to note. The other point to note is the test of to the satisfaction of the competent authority possibly, I think, is intended to be a more flexible test from the perspective of revenue authorities than reasonably demonstrate or something like that. My view is that it isn't particularly different because the satisfaction of the competent authority must, in an administrative law sense, be the reasonable satisfaction. So I'm not sure that it adds much, but I suspect that's probably what it's aimed at. So I don't imagine there are going to be many excluded platform operators, but just bear in mind that there is that possibility. Sorry, Graham.
So let's just consider that for a second, what you've just said, Harriet. So what you're saying is that even if you're exempt, you have to engage with the authorities.
Yes, that's right. Yes.
So there's not, and you have to do it at the start of the year.
Up front, which I would assume means at the start of the tax year. Yes. So
you may halfway through the year, your status may change, but you may have.
I think that's going to come down to looking at the legislation in the jurisdiction in question, to be honest. I mean, presumably, if suddenly you change what you do so you don't have any reportable sellers, you might be able to say, look, for the next 6 months for a part of the year, but I think that's going to depend on the domestic implementation. I
mean, I think it's going to be quite a rare platform that doesn't have any reportable sellers, but it still tells us something about the thought processes of the drafters, that they are attempting to eliminate. They are assuming that engagement with the authorities is the default position.
Yes,
it's exactly. Not you should engage if you have a reporting obligation. It's you should engage, and then we'll tell you that you don't have a reporting obligation.
Yes, exactly.
Okay. So let's just quickly go through the examples in scope which we cannot claim full responsibility for. We have done some research and borrowed some examples from other highly competent professional firms and professionals. So live streaming apps that allow access to events, performances for a fee, digital platforms, peer-to-peer sale of goods and services, access economy like carpooling or ride hailing. So that's Uber, isn't it? Or those derivative platforms. Marketplace for freelance services. I know that Harriet and I have a friend who's a book editor who uses one of those. Tech companies providing delivery platforms for food. So I think there would be reporting on your local takeaway, wouldn't there?
Yeah,
not sure how cross-border that would be, but there you go.
Well, some places in Europe, maybe.
I live in Gibraltar, so we're a very small country. Lots of people do come across the border, and you did definitely used to be able to order pizza from La Linea. Virtual marketplaces for all sorts of goods, yacht chartering platforms, online travel agents. So I think that's going to be a booking.com or a lastminute.com, showing my age there. But that kind of platform, online. So open online course providers for educational services where tutors, I suppose, could be put together. You all get the principles. It's anything that puts together an independent seller with an independent buyer, where the seller is not an employee, and then it collects the money. And there are some exclusions where there is simply payment processing rather than connecting people, listing or advertising of goods without the payment collection element.
Gumtree.
I don't know. You're younger than me. You know more of these things than I do. And rerouting people to other websites. So you could set up a website, or I guess a website that reroutes to other websites, that aggregates things. I think there are streets and shopping centers that do that, don't they? They have a front page website that reroutes you to other sellers. But as long as the seller's website is their website rather than your website, you don't collect money, then there's no element of reporting there. So we do have some excluded sellers in addition to the excluded platforms that Harriet was talking about, and that is governmental entities, an entity whose stock is regularly traded. So if BP decided to sell things on eBay, it would be all right. An entity for which the platform operator has facilitated more than 2,000 relevant activities by means of rental and movable property. I think that's hotels, basically, though it's worded very oddly, and I don't understand why they couldn't be clearer in their definitions there. Or a seller for whom a platform operator facilitated less than 30 relevant activities for sale of goods only where aggregate sales amounted to less than €2,000. So there is a de minimis rule. That's our de minimis rule. And obviously, non-EU sellers are out of scope, though that may well change when we roll out, or when they roll out the OECD model rules that Harriet was talking about a moment ago. So we've established that the platform is in scope. We've established who the sellers are that need to be reported on. So what is the actual obligation that is on the platform? And over to you.
So this, again, it's funny, isn't it? Because with all of these sort of automatic exchange regimes that we've got, CRS, well, not including DAC6 and MDR actually, but for CRS, it's quite sort of basic information that needs to be provided. And so for individuals, so Mrs. Smith, to be fair, Mrs. Smith would have to be selling quite a lot of booties to get over the de minimis, but who knows?
Yeah, but she only used to sell 31 pairs.
This would be somebody like Mrs. Smith. It would be their first and last name, their primary address, their tax identification number, and the member state of issue. And if you don't have a tax identification number, the place of birth.
Now that's really interesting, isn't it? I found that really interesting. They're going for place of birth. So if you're,
I'm not sure how useful that is, really.
German and you've moved to Italy, they're going to tell the German authorities, right?
Yes, that seems to be right. That would seem to be the case if there is in the absence of such a TIN. So presumably that's if they don't have a tax identification number, not if they won't provide it, because if they won't provide it, we're into the penalties.
Yeah, I mean, it's rare that people don't have a TIN now, isn't it?
Yeah, I mean, it's going to be a minority of cases. For entities, legal name, primary address, tax identification number of the entity, and the member state that issued that number. VAT identification number, if relevant, business registration number, where there is one, and the existence of a permanent establishment where that's relevant. So again, it's very basic information, and it isn't information as to sort of value or volume of sales or anything like that.
So that comes later. So there are two layers of information gathering, just to say that this is the initial due diligence, and then there is a reporting.
Sorry, I was going to go on to say that. And
sorry.
No, that's fine. If this is under the due diligence procedure, and so this is a due diligence procedure that the platform has to apply. It has to get a tax identification number. If a client won't give these details, so they won't give them to the reporting platform, the platform has to close the account after 2 reminders, and the seller cannot re-register for 6 months, or alternatively, the platform operator does not release payments to the defaulting user, so the defaulting seller, I suppose we'd call that.
Yeah. So I thought that was quite interesting, because that's almost reintroducing the recalcitrant account holder concept from FATCA, which dropped out of CRS and then.
Yes, yeah, it is, and it's putting an additional burden beyond merely the reporting burden onto the platform. Essentially,
if you don't play, you can't even get an account with these people now.
That would seem to be the case, yes.
So, I mean, this is quite a heavy burden, isn't it, for all those platforms that have never considered it before, all those semi-active, or because the platforms have to do this for everybody. They don't. It's only the reporting which they're carved out as, from my understanding, on the de minimis rule, not on the due diligence.
That's right, and in that respect, it is a little bit like CRS, isn't it? You have to check everyone, but you don't necessarily have to report on everyone, but you have an obligation to sort of categorize everybody, I think.
Yeah.
Broadly how I'd put it. And that's sort of very much the same kind of approach here.
For every account. And so that means that they're going to either have to close all the, let's talk about eBay, because they're the biggest, right? I would imagine number of accounts. they're going to have to filter all their accounts, work out which are active and which aren't active, then draw an arbitrary line a year ago, 2 years ago to see, and then due diligence on all the accounts after that period, and close all the pre-existing, all the accounts on the other side of that line, because if they're open, they have to due diligence them.
Exactly. And what is interesting, and I think this is really what I was talking about when they said at this stage they don't have to do any due diligence on sort of volume or anything like that, is that there is no de minimis for the application of the due diligence procedure.
Yeah, so I think what we're saying is, if you're operating a platform or you have a client who's operating a platform, they need to start working out what their plan is now, because whilst we haven't got to the timetable, it's not 1,000 miles away, this being introduced. And if anybody, even in the UK, has a Belgian seller, then they need to, a Belgian seller or a French seller or a Spanish seller, they need to prepare for this.
Absolutely.
We would be happy to help. So, Harriet, land.
Yes. So in addition, for the due diligence for land, you've got some additional requirements, and you have to have the address of each property listing, the land registry number or equivalent where issued, and where you are facilitating more than 2,000 relevant activities by means of a rental of a property listing for the same seller. So, i.e., that's where there's that sort of carve out. The reporting platform operator has to collect supporting documents, data, or information that the property listing is owned by the same owner. So they have to validate that sort of carve out as well.
So again, that's quite intrusive, right? I mean, I don't think many people know what the land registry number of their flat in Leamington Spa that they rent out on Airbnb is.
Well, you'd be surprised, wouldn't you? I mean, it's not that difficult to find, but yes, it is. It is. Well, of course, they wouldn't need to do it for Leamington Spa unless they were a Belgian.
Sorry, yeah. So, yeah.
Yes.
You take the point. All right, Groningen or I don't know, Saint-Quentin in Paris. So you understand the point. It's a level of information sharing with a platform that nobody has ever had to do before.
It is quite detailed, and you do. I mean, and this is just at the due diligence stage.
Yeah, and if those of us that worked on CRS and FATCA when it was first introduced, the painful extraction of information from clients who just didn't understand why they now suddenly had to tell you where they were tax residents, or even work out where they were tax resident because they may not have known it. I think this is going to be something that happens, and I think what's going to happen, my feeling is that in general, what will happen is, because these are tech businesses, they will attempt to entirely automate this process, and human beings on the other end will not get a lot of it right. Or they will get a lot of it right, but they'll also get a lot of it wrong. And I think that it's going to take quite a long time, and there will need to be human input on the, at least for a sense test on the data that's going in, because it's going to extend things to people that have never done stuff like this before. As
with all of these reporting regimes, and I do genuinely think this is the case, you can automate it to a certain extent. The automatic exchange of information, there is a degree that can be automated, but it still needs human input. And as we say in our book, that's particularly so for DAC6 and MDR. And I would say, obviously, I think Graham's just gone to get the book. Have you gone to get the book, Graham?
Well, so I'll be honest with everybody. I'm in a room that has motion sensitive lights.
Oh, you've gone to...
that just went out. So I've gone to put the lights back on again. I know it was really dark. Please don't point that out again.
Sorry, Graham. But yes, so as we discuss in our book, so MDR and DAC6 probably require the most human sort of intervention. And I would say DAC7 is actually more like CRS and FATCA and is more automatable, but it can't be fully automated. And particularly at this stage where it's coming in, and you're going to get a lot of platforms your clients in the UK who are thinking, well, we're out of the EU, fantastic, we don't have to deal with that. That really isn't the case. And so it does need you to be proactive, and it needs them to be proactive.
Yeah. So I mean, I would agree with what Harriet just said about it being very similar to CRS. I think essentially what it is, to maybe go a little bit further than that, is just extending CRS to other people that hold your money and collect money for you. And it will eventually be extended to any person that takes money for someone else. However they do it, there will eventually be a piece of reporting, whether it's digital or non-digital, it won't matter in the end. Their agents will eventually have to give reports if they don't already do it locally, but they'll be giving cross-jurisdictional reports. I think it's only a matter of time.
I do wonder if the digitisation of the economy that speeded up through the pandemic has actually sort of forced these things to be speeded up as well.
Yeah, I think that's very possible, because suddenly everybody, I mean, you're doing things like this online, whereas the face-to-face economy is probably less than it was, though that's not necessarily a good thing. Right, so reporting. So what does the actual report include? So you've done your duty, you've identified that you're in scope, you've identified that you've got relevant sellers, you've identified that some of them are in the EU, and you've done your initial due diligence. So what do we do then with our report? So we need to make a report. And we'll talk about when you make that report later, but the report must include the TIN, the business name, and the identification number of the individual or business in question. So unlike CRS, we don't have complicated rules where you look through entities. The entities are reported in their own right. And for non-real estate sellers, then you need to include all of that, plus the information in the due diligence, in the initial due diligence, the financial account identifier of where you're sending the money, the name of the holder of the account to which the funds are paid, if it's different from the seller, so that the authorities will be able to spot where they're using somebody else's account or a fake name. The member state of tax residence of the seller. Actually, it says member states in the directive. I think it is in the plural. I think I noticed that when I read it. The total consideration paid to the seller per quarter, and any fees or commissions withheld. So you're not only reporting on your seller, you're reporting on yourself in an indirect way by telling the authorities in whichever relevant jurisdiction it is how much commission you've withheld from consideration which was generated in their jurisdiction. So that's a little extra tweak of information that's being sent out. So for real estate rentals, there is slightly different information. Much of it is the same, though. You have to do the TIN, business name, identification number, etc. All of the above information on the due diligence slide, financial account identifier, name of the holder of the account if it's different from the seller, member states of tax residence, the address of each property listing, the total consideration per quarter, any fees or commissions withheld, and the number of days the property is let. So just a couple of extra bits of information there. That again is quite a basic set of data. It should be easily accessible, apart from maybe the where you have to go and ask the seller to provide you information, but you've got a stick to hit them with by closing their account if they refuse to cooperate. But it will need to be brought together. If we remember when banks were told to introduce CRS, they had a lot of the information anyway. It was just bringing it together into a single unified system. That's the word I was looking for. System that facilitated reporting that was the difficulty. But again, it's almost always about the collection of data from the client, or in this case, the seller, which is where the difficulty will come in. And I fully expect eBay to send me a self-certification form and ask for my national insurance number by the time we get to implementation. So that brings us on to the timetable for reporting and implementation. So The reporting period is itself the calendar year. And the reporting deadline is you must be report by the 31st of January following the reporting period. So you have a month to report. The implementation timetable is that the member states must publish legislation by the 31st of December 2021. So that is in 2 months' time. No, a month, 2 months' time. And the member states must implement beginning on the 1st of January 2022. So you've got a day to read the legislation before it comes in. First reporting, there's a typo that nobody noticed.
I'm blaming the person who typed the notes, Graham.
I sent it to you for review. Could you just, because I'm sure you've got the directive open in front of you, Harriet, can you just confirm what the date is?
I have got the directive open. Let me find it.
She's so organised.
Oh, I'm not, because I'm on the wrong screen. Hang on. No, it's still not doing it. I think you oversold my organisation there.
It's the 31st of January. I'm guessing it's the 31st of January 2023.
It is. I'm sure it is. I'm just trying to find it.
Yeah, so it would be 1 year after implementation plus 1 month, wouldn't it? Okay, so Harriet will keep looking that up, and if it's wrong, she'll tell us. So I think just to summarise, because this is the last slide, just to summarise, essentially what they're doing is they're extending bank style reporting to online platforms that generate income for people who are not employees. That's the essence of it. And there will be a large compliance requirement for those platforms. And as we said, we do fully expect those platforms to attempt to drive this as a tech solution. It will need some human input, and it will need people to be trained to check whether things are plausible or not. And as with CRS and DAC6 especially, each member state's implementation will undoubtedly be slightly different, and certainly the guidance will be slightly different if they issue any. If you don't know, we've written a book which cover international tax information exchange regimes, and we reviewed the DAC6 guidance, and there are many, many different variations on the DAC6 guidance across Europe, and we expect there to be something similar here. Though hopefully over time it will bring itself together. You can't find it, can you?
No, I've got it. I'm just waiting for you to stop saying what you were saying.
I'm just padding now. Tell me.
Well, there's not just one typo, I'm afraid to say.
All right. Okay.
You've got until the 31st of January 2022 to transpose the amendments into national law.
Yeah.
And then the new provisions will apply from the 1st of January 2023. And the first reporting of data will be 31st of January 2024. So legislation by 31st of January next year. You're going to be reporting on anything from the 1st of January 2023, and your first report will be 31st of January 2024.
So people have got a year to get ready.
Yeah, so it's not quite as desperate, as you might have thought. But it should be said, as with all of these things, given that I think the vast majority of people aren't going to be aware that this EU legislation potentially applies to them, and we've already talked about the difficulties in enforcement, but given that this potentially applies to them, even though they are not based within the EU, it is important, I think, that people start looking at it now, because they're also going to need to consider, if you have, say you have users, if you have reportable sellers in 3 or 4 EU member states, you might well need to consider 3 or 4 sets of domestic legislation, because you do need to look at how this is being implemented, because directives do have to be implemented into national legislation. So it is an interesting approach. And if you have clients who want to say, well, look, I'm not in the EU, why should I have to do this? You either need to come up with good reasons why they can opt out, which might be, well, they're excluded, or their sellers are excluded, or the extraterritoriality of the provisions you may want to look at that, but you need to start doing that now. Even though we don't have legislation, we do have the directive that's been around for a little while now. And people really do need to be aware, platforms do need to be aware that this is coming and it potentially applies to them, and they need to have a policy basis on which they're going to either comply, not comply, and I would have thought most will comply, because it is going to be, I think, my view is that it's very likely that within 5 years' time, this is going to be a global initiative, and DAC7 is just sort of the front runner, or one of the front runners. So yes, I think really the whole situation is that we need to be looking at this now, and I'm so pleased that there are 40 odd people who agree with us.
So I think that the valuable lessons can be learned from CRS, from the implementation of CRS, which, as Harriet and I have mentioned before, if anybody's been unfortunate to listen to us talk before, we both believe that the implementation of CRS and FATCA is probably one of the biggest projects, global projects, the financial services industry has ever undertaken. And it has got everything wrong that can go wrong with implementing something like this. And the tech sector should learn from what they got wrong. And the big thing that they got wrong was they didn't prepare.
Yeah, I mean, you still had people sort of turning up months and possibly even years after it all came and going, do I need to worry about this? And you're thinking, yes, you should have worried about this months ago. But I mean, I think I spoke to a client, and this was DAC6/MDR, who, with about 2 weeks to go before the provisions came into force, had something like 1,200 categorizations that they had to do. They had to look at over 1,200 transactions.
Wow.
To see if they'd fit into, to see if they needed to report them or needed to pass on a reporting obligation to somebody else, if I can put it that way. And it was 2 weeks before, and it was really, I think they'd been thinking about it for about a month. And it was at that point that they came to me and said, can you help? So
yeah, so another thing is, don't be frightened to ask because we've seen, and of the 40 people on the, I'm sure some of us have also seen, people who don't go out for independent advice to try and avoid expense, ending up with absolutely disastrous reporting errors later on. I can certainly give some examples. Well, because we're just chatting now, aren't we? So if any of our wonderful, happy participants would like to ask a question, please feel free on the chat.
We will try and answer it to the best of our ability.
We will do it. We'll try and get the dates right.
But on the plus side, having scared you with the slide, you now know you've got an extra year in effect.
See how we think of you. Okay, they're not rushing.
No, I think the other thing that I was going to say was, and this is a reporting thing more generally, I have seen a case, it was a CRS case, and I'm not going to mention even the jurisdiction, but there was a CRS case that I worked on where a very big institution that had to make a lot of reports, it was a trustee, it was a trust company, and it had to make a lot of CRS reports, and it had its software changed about 2 weeks before the reporting deadline. And it was putting everything as a single, it sort of had a number of single reports because it had a trust company that was trustee for a lot, and that was reporting under a trustee documented trust sort of arrangement or something like that. And it was advised, well, don't worry about it because you're only making, say, maybe 20 reports, so the fine's 250 quid a pop. They got a 6-figure penalty because the revenue authority in question took the view that it was the report for each trust, not the report for each trustee, which was subject to the single fine. So they actually ended up with a very big penalty. So timing does matter in these things, even if it looks like it doesn't.
Yeah.
So all I can say is we have seen all sorts of cases of people really suffering through not getting on top of it early enough. And that's something that you should definitely be conveying to your clients now about DAC7. So
it doesn't look like anybody has any questions. because we've clearly done such an excellent job that everybody understands it perfectly. You see, you say that. Does this apply only to online platforms, or would a small business providing consultants to its clients be captured? The consultants have a consultancy arrangement in place with the small business, who in turn make consultancy arrangements with its own clients. So I think that's from Anonymous. So go for it, Harriet. You've just said to answer it.
Look, this goes to scope, doesn't it, really?
Can I go back through our slides?
Yes, if you could go back to slide 4. You would need to be a reporting platform operator, which would mean you would need to be a platform. From what's provided there, I don't think there'd be a platform. I don't know if you have a different view, Graham, but I don't think that would be caught, no.
No, I think that's just like a consultancy agency, isn't it? Of a traditional type, not a digitized business. So I think that's out of scope.
I would agree.
Okay, are there any other questions? Just give you a moment. And then, another one. Oh, thank you. Thank you very much, anonymous attendee. And
all I would say, Graham, if you just go back to the last slide, if you have any questions that you don't want to ask out in the open, as it were, even as an anonymous attendee, you do have our email addresses and you can always drop us a line.
So here we go. Here's another anonymous attendee, or maybe the same anonymous attendee. You can't tell. How do you view the connect users part of the definition of a platform? Would you consider that users have to do anything active, or can this also be passive? So I think for me, I would say, and this is without any guidance from anybody, I would say that I think that you would at minimum have to create an account and register. I think that
I don't think you need to do anything more than that, because it says allowing sellers to be connected to other users.
Yeah. So we think it's very wide.
Yeah.
I don't think you could trick the definition by simply saying they need to upload photos or something like that. I don't think that would be, or they can't upload photos, or they can't take a more active role.
I mean, I suppose really possibly a good point to look at is the distinction between this definition of relevant platform operator and one of those excluded things, which is where you have a website which sort of pushes you out to somewhere else. And that's properly excluded. But because that does in one way allow sellers to be connected to other users, I think that does sort of show the scope of it, because we've taken that out specifically, presumably because it would otherwise be within it.
Yeah.
And that doesn't really do anything else other than sort of put them into connection with each other.
So do we think, are there any other questions? Oh, okay, thank you, anonymous attendee number 2. And I think that we've babbled on for an hour. The lights have gone out again where I am. There you go. We've babbled on for an hour. Thank you very much. We're starting to lose attendees, so I think we should round up now.
We should. Only to say, if you haven't bought the first edition of our book, buy it, or alternatively wait for the second edition of our book.
Don't wait for the second edition. Buy the first edition and then buy the second edition.
The first edition
never been in sales,
but yes, it's a practitioner's guide to international tax information exchange regimes. It covers pretty much all of the ones that are currently out there and in operation. It does not cover DAC7 yet, but it will next time around. Yeah.
So that's available. Also, if you want to listen to us talking in a more informal, chatting about taxway concepts and issues in international taxation, then you can find us on all good podcasting outlets. International Tax Bites, BITES. Don't put BYTES, you get PWC. And we've got 13 episodes up there discussing general matters and some news editions as well. So hopefully you'll find that useful. Thank you. Oh, we've got a chat. Thank you, Michael. That's very kind of you to say that we are very informative. Thank you very much for your attendance today. My name is Graham Jackson. I work for Hassan's, as you can see, and Harriet is a barrister with Old Square Tax Chambers. Feel free to reach out to us. We will be circulating slides, and if you don't get slides, then you can find us on LinkedIn at International Tax Bites on LinkedIn, and I will be putting the slides up there as well.
Thank you for coming or listening, whichever it is.